Good afternoon, everybody. My name is Gopi Natarajan. I'm CEO of Omega Healthcare. Again, thank you all for taking the time to participate in this webinar. Again, I want to welcome David Javdan of Alvaraz and Marsal, who graciously has accepted to host this webinar for us. I'll let David introduce himself and his background and all that, but Alvarez and Marcel they've been excellent partners for Omega Healthcare in a lot of ways. We work with them quite extensively, and David has done this many times. I believe this is his third webinar today, or third or fourth, and probably a couple more to go. He's an expert in the subject of what's going on with the Small Business Administration, announcement that's come out about the CARES Act and the Paycheck Protection Program and all that, commonly known as PPP. So we thought it'd be a good idea for us to host this webinar for our clients, as we are all trying to figure out and sift through this myriad of information that a lot of us really struggle to really understand and make sense of. How do we put this thing together, and who's eligible for what and whatnot. For some of you, it may already be clear, but Omega thought that it'll be a good thing for us to make this webinar happen, and as a service to our clients. So with that, again, David, thank you for your time. I'll turn it over to you. Right. He's going to talk, and then I think we'll have some time at the end for Q&A as well. All right. Thanks, everybody. Go ahead.
Well, Gopi, thank you so much. And everyone, my name is David Javdan. I'm a partner with Alvarez and Marsal. We're best known as the world's largest turnaround and restructuring firm. What makes us a little bit different is our advice tends to be very practical rather than theoretical. Most of our people are people like you who've sat where you sit. We're 5,000 people globally, professionals, fully 1/3 of whom are former C-level executives, operators, CEOs, CFOs, COOs, CIOs. We feel a lot of times, consultants, people ask them for a caterer and they give them a cookbook. We try and be very practical and implement and execute what you need. I lead, in an odd mix, a lot of our efforts with large cap private equity firm portfolio companies, but also our government efforts. I've held 10 part-time government appointments and 2 full-time appointments. Probably, most in the state government, a lot to do with healthcare. Was the technical advisory committee for individual healthcare policy, and my first client starting back in 2003 was HIP of Greater New York, which is now part of Emblem Health. And I've done a lot of work both for the payer and provider side of that. But probably most relevant to this discussion, I was general counsel of the U.S. Small Business Administration immediately after 9/11 and after Katrina and Rita. So Hurricanes Katrina and Rita, so have a great deal of experience with the SBA programs. I had reached out to Gopi, when all this stuff happened, and I said, how can we be helpful? What can we do for you? And he said, the best thing you can do for us is help take care of our partners. Above all, we want to look out for them. And so if you know of different ways that they can access some help. There's a whole lot of government programs and other things, and a lot of the information is very confusing and contradictory. If you can help our folks out, that would mean a lot to us. And of course, he's looking out for you. So we're here. I'm going to try and do a very high level overview, sort of to highlight the things, and then maybe focus it much more as a question answer section. I also have my colleague, Jeff Noonan, on the phone, who's done a tremendous amount of work in your industry and who might also share some insights. So I am going to share my screen, and hopefully I was able to do that. I remind people I went to law school, so PowerPoint, there's a joke among consultants that nothing is real unless it's a PowerPoint, but I was trained as a lawyer, and to us, nothing in a PowerPoint is real. So we'll see how this works. We'll turn to the highlights of the stimulus package. I'm going to hit a couple ones just broadly that are less my domain of expertise, but I really want to bring it up to you. There is the pandemic unemployment assistance and pandemic unemployment compensation. People who would not otherwise be eligible for unemployment or insurance benefits, the self-employed, independent contractors, gig workers, part-time, those who lack sufficient work history are all eligible to get this. Workers who are unemployed, partially unemployed, unable to work because of COVID may be able to receive payment for the first week of unemployment, with as a waiting week, and 13 additional weeks of unemployment benefits up to 39 weeks, including for any week for which they covered benefit received regular unemployment benefits. The benefits are equal to the amount of the unemployment benefit they would have been entitled to, plus an additional amount referred to as a pandemic unemployment compensation, the amount of about $600 per week through June 31, 2020. Now, I mention this, people say, wait, but I'm going for the PPP. I mention this because for a number of people going through the PPP, their employees might actually get less money. So as a way, so something that you really might want to discuss with your people when you bring them back, to the extent, one of the issues we discuss is, in these times of trouble, do you lay people off? Do you furlough them? Between the furlough and laying off, we tend to recommend the furlough. With layoffs, you tend to have WARN Act implications, which means, for companies with as few as 50 people, they may have to pay either 60 days of compensation or give 60 days notice before laying people off. If you furlough them, under most state and federal law, if you have reason to believe that they'll be back within the next 60 days, then you can furlough, you can not lay them off, but furlough them. The additional benefits are you're showing that you've got some continued relationship with your employees. A lot of people are still paying those employees their benefits during this time, even if they're getting the unemployment compensation, their group health or anything like that. And it's a way of saying, hey, we're going through this together. We're not looking to dump you. We hope that you're here later on. And then the individual conversations, like I said, a lot of employees may not realize it, but if you have the conversation with them to say, hey, look, we've done the math and you're better off taking unemployment. We're happy to bring you back for PPP or anything, but above all, we want to make sure you and your family are taken care of. Those conversations tend to actually work very well because people do like that extra money, to have. And like I said, who thought flipping slides would be so much challenge? There's a bunch of labor tax provisions, and people can look through this. There's a payroll tax offset, reimbursement for FMLA and paid sick leave costs. There's a potential deferral of payroll taxes, which is allowing you to defer payment of the employer's Social Security and other taxes over 2 years. The provision also allows many companies to maintain liquidity, preserve cash for other purposes. I also mention this because if you go through PPP and get the money forgiven for the payment periods that the money has been forgiven for, that deferral will cease to exist. It doesn't mean once you've gotten the PPP that you can't defer your payroll taxes anymore. You can, but you just not for those periods. I do want to mention that you have to look at your particular state. The federal government has deferred theirs for over 2 years. I think California has given a 60-day deferral. Most other states have not given a deferral. So if you're using a provider to do your payroll and all that stuff, they should know it well, but just make sure you're doing all the right things. There's an employee retention credit, which provides a refundable payroll tax credit of up to 50%. of qualified wages, maximum of $5,000 per employee, paid to employers, paid by employers who are forced to close this. For some people, that could be a lot. Obviously not as good as PPP, and you cannot take this as PPP. I think a lot of people are aware of the deferral of federal income tax filing payments. You do need to take a look. Most states follow the federal deferrals, but you want to make sure that you're good. There is an ability, if you have net operating losses and you've paid other taxes. And again, I'm just trying to highlight things for you, and we could go into more depth on any of them. You could get that. Refundable AMT credits. There was a retail glitch fix, probably less interest here. There are interest limitations and all that. I think you should all just be aware of. I went into some of these other ones in more detail just because they do interact with the PPP. And let's see. Other short-term things, quickie refunds, estimated tax payments, state taxes, non-US payments, and then small business loans that we're talking about. I do want to highlight for many of the people, for those of you that qualify for the PPP that we're about to discuss, I'm just talking about the federal PPP. A number of states and even municipalities have their own small business loan and lending programs that you should investigate. We're happy to help steer you in the right direction. I didn't want to overload this conversation, but for example, New York City has its own version for smaller businesses, for even smaller businesses of the PPP, and there are other small business loans and opportunities being given out there by state and local governments. So depending upon the jurisdiction you're in, there's other additional benefits besides the ones I'm going to come to now. Summary of the small business loan provisions. I'm going to go talk about what used to exist because it will help you understand what exists now a little bit better. Though this disaster is very different. Normally a disaster is in a confined physical area, and there is normally both physical damage and economic injury due to the basically business interruption. And the EIDL loan, the economic injury disaster loan, has basically been the government's version of business interruption insurance. So of course it's a loan, and it was up to $2 million, 30-year fixed. And when I talk about a traditional disaster, we talk about Hurricane Katrina, right? It hit 2 states, it had a particular area, a lot of buildings were destroyed, and SBA would give you the money to rebuild your house. I know it says Small Business Administration, but it's always been the direct disaster lender for the country, not FEMA, not HUD. SBA would give you the money to rebuild your house. After 9/11, Goldman Sachs got a $10 million loan to help with the physical damage to their building. Goldman said they didn't need the money, but they were taking it because they didn't want other people to feel embarrassed or otherwise to not take it, and they pretty quickly repaid the loan. And you've had the economic injury. The challenge we have here is there's no physical damage, and for the first time in history, the entire United States has had a declaration of disaster. What to have done. So the traditional EIDL, again, 30-year, 3.75% fixed, 1-year guaranteed deferral of payment, though the interest obligation still piles up. Potential for it to go up to 2 years of deferral. You'd have a personal guarantee on the first $200,000. And I'm mentioning some of these things because they don't exist in the PPP program, but people have heard about them, so they think it's part of PPP. So I'm highlighting it. Traditional size standards apply. Now, people I spoke to right at the beginning, I said immediately apply for the EIDL. Worst comes to worst, you don't take it, you don't use it, but it's a great program. They passed the CARES Act, and they were really going to recreate EIDL, but bigger and better. And because there were so many places, the SBA was going to be overwhelmed, and they wanted to do it to banks. So EIDL was initially the PPP, what is now the PPP program. The CARES Act Small Business Lending was originally intended, when the bill passed Congress, what seems like a million years ago, but I think 2 weeks ago, as a 10-year, between 3 and 4% fixed 6-month deferral with perhaps another deferral, basically is a loan program that could go up to 10 million to help you with all your different needs, working capital and all that, with a small forgiveness program to encourage you to give things. Well, given the amount of demand and given the amount of issues, they decided that was just too much. So instead of being a big 10-year loan program, with deferrals, with a small forgiveness piece, it's become more of a grant program with with whatever's not forgiven becoming a loan. So the loan is now a 1% loan. It's a 2-year loan. For most people, almost all of the loan is going to be forgiven. The reason they keep it a loan is to make you do the things that will make it forgivable, right? So how much can you borrow? And I think this is a very important part, because I see some people have been stiffing themselves on the amount that they can borrow. So I want to make sure that all of you maximize your ability. So you can borrow 2.5 months of payroll, and that 2.5 months of payroll can only be for people. It has nothing to do with citizenship. People think, oh, is it an American person, not American? If you have an American citizen working in India, they're not eligible. If you have an Indian citizen working in America, they're completely eligible, right? So it's all about employment inside the physical United States. So, and it's all employees. So, you might have seasonal other employees, people working on commission uneven. So you can average the payroll over the last 12 months. Only US people who are working physically in the United States, and only employees. Independent, you cannot count independent contractors, but you can encourage and tell your independent contractors to go and apply directly for themselves. Unlike all other loans in history, the independent contractors can do it for themselves. And by the way, I will also say this. Normally, it is not any employer can do this. Normally, you have to be a business. You could be a not-for-profit, but you need to be an operational not-for-profit, a commercial one that charges a service like a private school or something. If you have a church, synagogue, mosque, whatever other center, they are eligible so long as they have employees to apply. So I want to make sure everyone spreads that out to people in their community that they care about, that they can apply. So you can apply for 2.5 months worth of payroll, but excluding people working outside the United States and excluding any salary. And I want to make it very clear that it's salary above 100,000. You can have an employee that makes above 100,000. You can't include their salary, but they might have very generous benefits. Medical leave, paid time off, health insurance, 401k contributions, pension plans, any of that, you can add that on to the 100,000. Right, so that is the basis upon which you can borrow the money, 2.5 months. So a little bit over 10 weeks. Now, what can be forgiven on the other side? So payroll, again, with the same limitations I put forward. And by the way, one of the areas I've had, there's been some debate about, which is whether or not, let's say, if you have a doctor, paying their medical malpractice insurance is a health benefit or something like that. Some people in applying have said, yep, if we're doing it for the doctors, it is. I think if you were to read the law pretty closely, that would seem to be a stretch, but people are doing different things. You have to certify in the application that you're small when you fill out the application, and I think they afforded to folks, or they will after this, a series of materials I have on this. We didn't want to go through them. When you fill out the application, you check what the proceeds are. You can only use the loans for the items you check for the proceeds. Recommend that everyone checks as many boxes as possible. You don't have to use it for that purposes, but why not give yourself the maximum flexibility? So what gets forgiven? What gets forgiven is 8 weeks of the actual payroll you have. I think a lot of people got confused. It's like, well, do I do an average payroll? No, you're gonna, when you apply for forgiveness, you're gonna attach your actual payroll documents, and the money you spent, you're gonna have to do the calculations to take out, people not working in the United States, and income over 100,000, but that will be it. You know, it's not some theory. You're going to have to show the documents. Then in addition, you know, rent, mortgage interest, utilities, encouraging people to think of utilities broadly to include internet, phone service, cell phone service, any interest that you have on something borrowed from a pre-existing obligation that exists. When I say pre-existing, before February 15th, you can do that. Now, to the extent that that is less than 1/3 of the payroll, or in other words, 1/4 of the loan, but less than 1/3 of the payroll, that too can be forgiven. Now, you're saying, now you might be saying, well, wait, I'm not going to bring everyone back, or I don't need to bring everyone back. Now, and that's your choice. You might want to look at whether or not certain people are better off under the enhanced unemployment. Whatever doesn't fit within that, it still has to be for the purposes of payroll or other purposes. Whatever doesn't fit within that is not forgiven. So that part does not become a grant. It remains a loan. Now, for some people, they're saying, okay, well, it's not bad to have that loan. Money's fungible. Obviously, I'd rather have it forgiven. But, you know, it's a loan. Even so, when you use a loan for that, though, you must use a loan for the purposes that were set forward. So you might use it to pay payroll outside of those 8 weeks for people you want to kick. Remember, when you're talking about payroll, by the way, if there are people you're not bringing back because they're better off on unemployment, you may still be paying their healthcare benefits and all that stuff. That still counts, right? So anything you're spending on people still counts. So I don't want you to change yourself when the time comes. And so any of that remainder will be a loan. That loan will remain for 1 year. Now to go back to the EIDL program. So you can see that's nice to get that sort of grant. A lot of people are saying, well, wait a second, this would have been much nicer to get. And I think it's what was originally contemplated. I think they really thought this money was going to be coming up. The money would be hitting your bank account as we were leaving our houses and starting to work again. Obviously hasn't worked out that way. For a lot of people, a good chunk, they'll put this money out before their people are coming back to work. So they're basically paying people not to work. And that's a question as to, what you want or what you don't want. Some people are waiting a little bit to see when things come back. You are allowed to not pay the money immediately and then go backwards and say, okay, I'm retroactively going to pay people, and that will qualify. But the timing for this has been a little bit off, but no one wants to say, no, don't pay your employees now, pay them later. The government is really trying to do this to keep the economy going, to keep, paycheck coming into people's pockets so that they'll go buy things and keep the economy going. So that is basically PPP. EIDL I discussed with, there's an extra twist since Friday to EIDL. So the way it should work is you can get it in addition. You need to use it for different purposes. But right now they're saying if you apply for EIDL, within 3 days after you apply, you get a $10,000 grant. It's not been coming within 3 days, but even if you're not eligible for the loan, you get the grant. So I do encourage people to apply for it. Now, please know traditional SBA size standards as opposed to the special ones for PPP apply. So PPP, there's a safe harbor if you're below 500 people. Their affiliation rule and other issues, I'm happy to try and answer any affiliation rules, questions or anything. But, those apply. So it's 2 different programs, all that. So many people have subscribed to the program that right now the government is saying, hey, if we've already given you loan documents, like I know clients of mine who I told, friends, no one's hired me to do any of this SBA stuff, but friends, I said right away, go apply for the EIDL. Some of those people got $500,000, $1 million loans. The loan documents were signed. The federal government is honoring those. Right now, because there's a shortage of funds, they're saying it's quite possible that you'll get your $10,000 grant and then only a $15,000 loan. Now, I still encourage people to apply because whatever happens, I think if you're in the queue, it's a good thing. There is a lot of discussion about putting another $50 billion in to fund these other things. Again, great thing. I'm not sure that $50 billion does it, So we'll see where that goes. I think in the materials and all that stuff that I'd forward on, there is a there is a link to say how to apply, and you're better off basically having applied. There's the Main Street Lending Program. I think this chart is useful. It's a summary of the grants and loan programs available. You can get PPP and the Main Street Lending. Now, the Main Street Lending right now is for companies above 500, but below 10,000, or with revenues less than 2.5 billion. I think there's a little bit of a question as, hey, if my revenue is below 2.5 billion, do I still have to, do I count even from below 500? I think the answer is no, you've got to be above the 500. I think all the fees and all that stuff are here. The Main Street program is difficult, I think, to figure out. You are allowed to get PPP in the Main Street if you fit within it. The regulations, they just announced the Main Street program 72 hours ago. So all these charts and all this stuff we have here is yeoman's work from our people coming in. They've asked for comments for rulemaking through April 16th, so for 2 more days. So I think real terms on this program won't be out for another week. But I definitely think you want to take a look at it. Possible that you might qualify, that they might say, yeah, you know what, no, just the under 2.5 billion in revenue. So if you're under 500 employees in a small business, you might qualify for this also. It has to be seen. Again, this will be a loan that goes through your bank as opposed to going directly to the government like EIDL. And we think it's something to keep an eye on. I think you'll see, here are different things here. A lot of the parts here are technical. I would say both for PPP and for the Main Street Loan Program, if you're considering it, I would reach out right away to your bank. A lot of the banks are getting overwhelmed. Most of the banks don't know what's going to happen with the Main Street program. Most of the banks are open for PPP. If you've not yet applied for your PPP, I would strongly recommend, if they're doing it, going to a bank with which you have an existing relationship. The anti-money laundering, there's been a lot of criticism saying, oh, the banks are taking care of their existing customers first. That's not fair. They should, this is government money. They should be helping everyone. It's not actually the banks trying to be nasty. Congress left in the Know Your Borrower anti-money laundering rules. So it's very hard, particularly when you have things shut down. A lot of banks you can still go into. They were considered essential, but a lot of people aren't there. So it's very hard to open up these new accounts. And so, to the extent you've got an existing banking relationship for PPP, the biggest bank to be doing this was Bank of America. Wells Fargo was doing a very good job, but they hit a regulatory cap. The regulators did not allow them to exceed the regulatory cap, so they had to stop doing it. I think there's discussion about letting them back in, but it was very difficult for a lot of Wells Fargo customers. They did 30 billion worth of these loans, but to come in, but that might change at any point in time. So I would reach out to the extent that you're interested in these programs, and talk about them and let them know you're interested, and some you could apply for right away. Excuse me. The final thing I'd say, to the extent that any of you are exporters in any way, I didn't include it here because I didn't think it was going to be really relevant, but I'll just raise it. The Export-Import Bank of the United States, often derisively called Boeing's Bank, is created a couple new loan programs. So Boeing traditionally has done it so people who want to buy their products but who can't borrow the money, don't have the right credit, can do it. They get a guarantee from the government to let them buy the products. But now also, because people have unsold inventory, and I'm being told that inventory also includes software, and they're trying to do other intellectual property, they're actually letting you borrow against your unsold inventory or inventory you could sell. Now it's a little bit complicated. It's got to be 50% of what you're borrowing against has to be of American content. That doesn't mean 50% of what you sell has to be American content. 5% of what you sell can be American content, but you can borrow, but of that, you can only borrow against that 5%. So that was just a lot on the PPP and Main Street lending. Gopi, should I take questions, or should I maybe have Jeff talk for a few minutes and say what he's seeing, and then we can turn to questions?
Jeff, are you on?
Yeah, I'm on. And Dave, I actually have a question for you. Sorry, my camera's not working, but one of the provisions, as I was looking at the Main Street lending program, it is that that the organization in good faith will not outsource or offshore jobs for the term of the loan and 2 years after completing repayment. A lot of our listeners today are offshore and outsourced providers. So how does that generally work in terms of the loan? I don't think the intent is that, hey, I'm offshoring and outsourcing today, that I need to suddenly pull that back in-house. I would think that really against the jobs that are contemplated in whatever sort of loan that you get. Can you just clarify?
Absolutely, it's a great question. So anything that's already outsourced or offshored is okay. It's not going to affect you one bit, right? Then, as a general rule, employment in the United States is supposed to be maintained, and it's a question. Overall in the legislation, they say 90%. Treasury explicitly did not put the 90% in the Main Street guidance. They just said best efforts to maintain American jobs. So it's a little bit, so at very least, you could still do an additional 10% of outsourcing, onshoring, as long as it was 10% combined with any other layoffs or anything else you did. I think it's a consideration for those, for those people here and for those who take the loan. But it doesn't ban what's already been done, doesn't ban anything from continuing. And again, there's no final rules or regulations. They could change everything tomorrow, but that's the angle it's really coming from.
Thank you for that. So this is Jeff Noonan. I'll give just a few minutes of perspective. David, thank you for that really insightful overview. What we've seen is that, just about every business that we've worked with, and I apologize that I'm audio only. My camera's not working very well right now. Just about every eligible provider that we have seen has exercised and utilized one of these programs. The guidance that we are providing to them is, because the rules and regulations are changing somewhat daily as it pertains to telehealth, it's almost hourly in terms of what the payers are doing. And in some cases, they're applying retrospective lookbacks for how they're going to interpret and apply some of these policies. So the guidance that we've been providing is that more than ever, documentation is critical. The guidance to your providers, your customers, is that while they I'm sure have aggressive clinical documentation efforts, they need to up their games and improve what they are already doing today, particularly on telehealth. I think there's the belief that because there's not going to be any audit work that's contemplated right now and a lot of what CMS is coming out, we believe very strongly that they're going to aggressively look back at this period to try to identify instances of fraud and abuse. And documentation is going to be critical for areas of new service like telehealth. The second place where documentation is critical is in the published policies and procedures. And this is going to be, it's going to impact every type of provider a little bit differently. But under the PPP, there's rules, anything COVID related, you cannot balance bill. We know that some of our clients like hospitalists, radiology groups, emergency physicians, where we're getting secondhand information from the hospitals that we serve, and diagnoses can change depending on whether we're billing daily or episodically. You might have to have instances where you've sent patients bills and now you need to go back and retract them. And so the best thing to do is have policies in place that are defendable in the event that there's any sort of audit that needs to occur. We've recommended that providers add verbiage to their patient statements stating that if they believe this is COVID related in any way and you're in a non-par, that they should call to try to make sure there's an avenue for patients. And outside of that, I think there's still just a lot of general confusion for how this is going to impact each individual provider differently. So right now, a lot of confusion in the marketplace. That's a lot of what I have. Open up, I think, for questions, Gopi, if that works for you.
Sure. Diptendu, how do we open it up for questions?
Sure. Participants can easily unmute themselves and ask the question. The forum is open. So.
Did we cover every question so well that there are no questions?
Hey, David, just one question here. Sorry, this is Rick Foss here. Just I'm 99% sure you did cover this, but for salaries that are in excess of 100,000, you count up to the 100 as far as your payroll, right? So everything above 100 goes out the window, but the first 100 still can count.
Or salary, but you can include benefits, right? So if you're paying healthcare, pension, I mean, very generous on the benefits. So pretty much any benefit, paid leave, sick leave, family, anything that you have, the related cost to that you can put in. So we've had some where it's been almost 50%, right? Because you've got someone who's paid higher. The 401k, anything you can include. So that can bring the number up, much higher.
Thanks.
And the benefits, and also I've seen people forget the benefits for someone's $70,000 a year employee, but they forget the benefits there. Important ad.
Where I can put you up against a white wall and I look at your outline.
Not sure who was talking. It looked like Wendy, or not sure. Debbie, is that? Not sure who was talking. Couldn't hear you. Whoever was trying to ask a question. Was trying to talk.
So someone was asking a question. I'd love to hear it if you want to click unmute.
I know.
Again, I'd highlight here, we're giving general advice. We're not giving legal or tax or any other advice. We're flagging things for folks. You definitely have to work hand in glove with your lawyers and other folks. A lot of nuances affect things here, particularly in, the affiliation rule I discussed and certain other things.
Hey guys, this is Stacy Calvaruso. Can you hear me?
Yes.
Okay, great. I did type my question because I wasn't able to unmute a few seconds ago, but it did allow me, so I'll go ahead and ask the question that I have. In relation to the offshore and outsourcing of services, I just kind of want to ask a general question. I'm sure that this will open a can of worms, but with the stay-at-home order, the volumes completely decreased in many of our areas of business. So once the orders are lifted and people return to work and return to healthcare, return to their healthcare providers, we believe that the volume will increase, and it will actually increase pretty quickly because people will need to have refills and they'll need to be checked, et cetera. So if that volume increases to more than what our initial volume was prior to the stay-at-home orders or the COVID dates, is that going to be a problem when, it may go over 10% of that, we may increase that number by 10% potentially. Is that going to be a problem with our forgiveness loans, or do we need to look at resources to hire people in-house versus outsourcing that additional work?
So growing and hiring additional people is perfectly fine, and you grow, but so for the PPP, the amount, so there's no ban on offshoring or anything in PPP. The only, that is Main Street, but the one thing is, what you will get forgiven is your payroll to employees. So if you, borrow the money and you hire more employees, that's great. You can pay them and that will be forgiven. But if you go in that period, hire not part-time employees or full-time employees, but contractors, that money you spend on that will not be forgiven. But again, it's an 8-week period.
Okay.
It's an 8-week period, and whatever happens after that, you're okay.
Okay.
This is where, this is Jeff Noonan, and I think there's a little bit of a different perspective. By the way, some of these things are facts and some are interpretations and opinions, so please treat the answers accordingly. The rule's written so vaguely and doesn't always apply to the nuances of healthcare. I think in the instance of a volume surge, a way to think about it could be how the work is distributed across a particular function today. What I mean by that is, if a physician group is completely 100% outsourcing all of RCM to you, and suddenly there's volume up, I don't think that there's any belief that they should suddenly start to hire a few billers in-house to keep the 10%. I think that the outsourced billing would stay the outsourced billing. It's just that they can't outsource new functions that they weren't otherwise doing. Where it gets a little bit grayer, I think, is if there's some sort of partial outsource. And so let's just say it's a hospital client, and they're doing a safety net type program and they're trying to hide behind that. If there's additional staff that are needed for that and it's a split function, I think the program would look more favorably if those positions were hired internally versus offshore. But a lot of it comes back to documentation, and the words good faith, I think, provides a little bit of wiggle room to have some interpretation there. Dave, I don't know if you disagree with that perspective.
No, and I think, look, I spoke to someone on the Hill. They said constructive ambiguity, right? Again, there is no, your payroll is what your payroll, that's forgiven. The only limitation on reducing payroll is for those 8-week periods. If during the 8-week period you reduce anyone's pay by more than 75%, they're not going to be eligible to be forgiven. But anything but those apply to others, to the Main Street program that you might go to. Regulations aren't out yet, so everything is conjecture. I spoke to someone on the Hill who wrote it, and you see what the Treasury regs are. You could still even shrink your workforce from 10% from when you get the loan, and you'd still be okay, right? That's clear under the statute, but it seems like it might be even more reasonable best efforts. So I think what Jeff is saying is right. No one is telling you need to go hire people in-house instead of going outside. I think the challenge will be, and if you just have more surge volume and you're adding on more surge volume, I think that'll be fine. I think where you will have, questions is if you have functions that are currently being done in-house, and you outsource them beyond 10% of your current workforce, and not just the outsourcing, but the reduction in U.S. jobs, that's where you might have an issue. And again, that's, by the way, not forever. That's for the 4-year term of the loan.
Well, guys, I really appreciate those answers. That did kind of clear up the questions that I had, and I have definitely enjoyed hearing both of you kind of review this with us at this level in this detail. So just a personal thanks for you guys for not only all the white papers that you're putting out, but the informative tips and hosting this conference call. It's been great for us. Thank you.
Thank you. Appreciate it. There's
David,
one other question I saw in the chat area. I don't know if that's a question that I should pose maybe.
Gopi, you're breaking. Do you want me to read the question out?
I'm not sure. Yeah, you can read it. Yeah, please.
Okay. So David, there's a question on the chat box that says, what if you reserve cash and you get a PPP loan? When I fund my April and May payroll, I will use a mix of both my reserved cash and the PPP loan proceeds. How will the forgiveness work in this scenario?
Absolutely. Look, if for some people they have separate accounts, it's probably easier just to keep them separate, but you know, you will be forgiven for what you pay them. So doesn't matter. You can even retroactively pay people. So if you fund it from your April, May payroll, the thing to be clear is the 8 weeks starts from after you get the money. So you can retroactively hire someone, but the 8 week period to burn it is from when you get the money forward. So you don't have to worry about anything you did prior to getting the money. And you just have to say you spent the money this way. So you will give them materials from your payroll processor, and you will show them what you spent, and that will count. So, and I want to say the key for money coming in is the average monthly, but it is literally the money you pay. They're going to look at the exact dollars that you paid in the 8 weeks afterwards, and that's what you're going to submit with the takeouts for, you know, above 100K and all that. And to the 100K, the fringe benefit expenses above 100K, to the extent they're healthcare and those types, they are 100% allowed. SBA has given guidance. Now, if you know, I want to be careful, right? If you get a company car, if you get a club membership, those types of fringe benefits, no, they are not. But if you were talking about, you know, sort of payroll related fringe benefits, healthcare, all that above 100K, it is not unclear. They have issued, what might be unclear is what fits within that, right? I know some people tried to argue, which I think is probably maybe not the strongest argument, that well, if you're a sole practitioner and you're doing malpractice, you might have a stronger argument that if you're a big company or anything like that. But that is a little less clear. But they've actually articulated that healthcare benefits, all that above 100,000, are okay.
Awesome. Thanks, David. Any other questions from anybody? Please, either type or ask. Going once, twice. I know we're nearing the end of the hour. Anyone else has questions, please? So Diptendo, I think we can conclude if looks like, I know David's got another call starting soon. We'll give him a few minutes. Again, I want to thank everybody for participating. Thank you, David and Jeff, for your wonderful insights and consult in this. Really appreciate all that you shared with us and Omega's clients as well. Thanks everybody for participating. Really appreciate it, and we'll try to do more of these kinds of informative sessions as well, right, over the next coming weeks. Thanks again, everybody. Everybody stay safe, and thank you.
Thanks, everyone.
Thanks, David. Appreciate it.
Stay safe, everyone.
And Jeff. Thanks, Jeff.